We are seeing some crazy things in the aftermarket here because of some earnings. So we're going to talk about earnings a little bit today before we get into that technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta, looking at GME and AMC as well towards the end of this video, looking at the VIX, the dollar. We have a lot to get into today. But the first thing I wanted to mention was there was an earnings, and Microsoft is seeing some dramatic downside. So I wanted to just go over a few rules that I keep in mind around earnings season and how to keep myself a little bit safer, because it really is a 50-50 flip. And as we pull up to the top here, we're just going to see I have some stuff written out for us, and overall this is just to get the full point across how I really look at earnings. And the first thing to acknowledge is it is a 50-50 flip. You do not know what they are going to say, whether it will be taken as good or bad from the market. We've seen plenty of times where a stock gets bad numbers that you would expect to shoot it down, and then it ends up going up because of something said within the earnings call or some kind of future projection. So as long as you are looking at that and acknowledging, hey, this is a 50-50 flip, that is what you have to go into every earnings with, and that is something that's really helped me out around earnings season. But if I say I absolutely need to take this trade, I think it looks great, I'm really convinced that it looks great, the technicals look great for it, it looks like it wants to turn around. Okay, well, there is one thing to do in that scenario, which is downsize your regular position. So any position that you would normally take, you want to downsize that position. Now, the reason you can do that is because when a stock has earnings, its volatility is much higher. So you can see bigger overall moves, right? Big moves to the upside or a big move to the downside. So earnings does that a lot of the time, meaning if I would say do $1,000 and that goes up 10% because of an earnings, yeah, I'd make a ton of money. But if that would go down, I would lose $1,000, and maybe that's a lot of money to some people. So what I overall would say is downsize that position. It will really help you out. It'll still convince you to be in that play, but maybe only, $300 or something like that. And compared to $1,000, losing $300 is a lot better than risking $1,000 if that is something that is important to you, if that's an amount of money that's important to you. But any position size around earnings, you just want to be careful with that, because if you downsize that position, that is fantastic. You're still going to see a big move, and you can make plenty of money if that move actually happens. And that's where we have to get into the waiting for confirmation. So we really want to actually wait for the confirmation of that move. If that confirmation is not happening, that MACD is not curling up on and giving you some green bars on that histogram telling you that divergence is going to play out, then you really have no reason to take the trade, and therefore you shouldn't be taking the trade in the first place. And that's something that is just a rule for myself. Like, I'm speaking for myself. I'm just saying, if I do not see confirmation, I will not take the play, especially around earnings, where if I did take it, I would downsize that position. Now, the only other options really left are to just don't do it. Just don't trade around earnings. Being patient is something that I preach a lot. Being patient, being a trader really takes a lot of patience. And so just not trading around earnings can help you out. Wait until things fizzle out, or maybe even trading something else. As you saw today, I mentioned live, people asking if I'm trading Microsoft, if I'm trading AMD, what am I trying to take calls on? I'm trading neither one. Okay, I'm trading neither one today. I'm not going to take some kind of trade with that just because, some kind of big trade with that just because I think the technicals look good and they weren't able to confirm. So let's take all this into consideration and just take a peek over at Microsoft real quick. Microsoft right now, we're seeing that drop way off down towards 396. You want to know the funny thing about 396? On Patreon, we give you weekly expected moves. Do you know where that weekly expected move is? 395. I'm pretty sure it's right at 395, somewhere between 395 and 396. So this area here, we're gravitating right towards it in the post market, seeing that drop down through the channel. This does not look good for Microsoft, even though, what did you notice? There was some good technicals showing up here. So if we take our rules, we immediately know, hey, this right here is earnings. This is going to be a 50-50 flip. I don't know what info they are going to produce. So as long as I know that, then it's all on me. I am fully accountable at that point. Seeing a double bottom that could prove to show some upside, but it is a 50-50 flip at this point. Has that confirmed? Well, the RSI has not gotten above that center line and the MACD has not crossed. So this did not confirm. AKA, with my overall strategies that I do and according to my earnings, how I treat earnings, this is not a setup. Now, this is a setup to pay attention to, but that never confirmed. It actually unconfirmed at the end of the day. So you really have to be quick with it and make sure that you're paying attention to what's going on in your chart, because this never confirmed an actual upside move, and now it is starting to come down. We will see how this reacts from that weekly expected move in the aftermarket. We'll see if that is able to build back up and get back into this little range that we're in, this little channel. So we'll pay attention to that for Microsoft. Now, one thing that you can do is say downsize the position. So in this scenario, let's say $1,000 is a big position for me. Well, then if I tried to get in on this early and I did $1,000, well, boop, my $1,000 is pretty much gone because it's a 50-50 flip and it went against me. But let's say I said, hey, I really want to take this play. I know earnings is a 50-50 flip, so maybe I don't want to risk as much money. Maybe I'd risk an amount of money I'm willing to lose and say I only do $300. Okay, then now I've lost $300. Is losing $1,000 worse than losing $300? Yes, it is. It is much worse. It is 70% worse, right? So at that point, we would say, okay, this is not something that I overall want to trade because it's not confirming. But if I did, then I'm going to downsize that position in case something bad happens. Something bad did end up happening. This MACD never curled up. Now, if I wanted to trade something, maybe I would trade something else. Maybe I would trade something like Nvidia or something that does not have earnings tomorrow, right? So I could look at Nvidia and see, hey, we're starting to pop back up, and that's most likely because of AMD. We're going to get into that in a little bit, but just looking at something else, like looking at Mara, looking at things like this instead, seeing if that's confirming, waiting for the signals, paying attention to a different stock around earnings will help you out because these will act a little bit more naturally than something that has earnings the next day. And I felt that was very important to talk about. Now let's get back into the SPY just for a brief moment on this 30-minute chart to talk about the signals we're seeing right here in front of us. And we do have a divergence down here that was created slightly outside of that daily expected move for today. The new daily expected moves being 546.72 to the upside, and we do have 537.28 to the downside, and you're seeing that pull down a little bit here. This has not confirmed yet, so we do not have that confirmed move to test 546.72 at this point. So if this divergence is going to play out, we would look for that to turn up in the morning. Please join us and make sure you're subscribed for tomorrow's live video so we can talk about some stocks with you guys. For the time being though, you see the divergence here. The reason that I like these is because they like to turn up 2-hour charts, and that 2-hour is starting to reject. And one thing to notice about the SPY, we're just going to talk about the dollar while we talk about the SPY. The SPY is actually dropping to lower levels after market. So even though you're seeing some turmoil in Microsoft and maybe some other stocks, you are noticing that the dollar is heading down while the SPY is heading down in the aftermarket right now. So that could be a hint that there are some insiders buying. You have a rejection as of right now. That can change, right? That can change. We can curl down on this 2-hour, go down towards that weekly expected move. That would be most likely the bearish case. And then the bullish case is this 30-minute divergence plays out. We see a move, we're able to break through maybe and see something crazy outside of 546.72. But for now, we're going to watch these lines in the morning because we land in this zone 68% of the time. This is what is calculated by the options data for tomorrow. You're seeing the similar signal on the Qs, by the way. So the Qs are showing you that 30-minute divergence that took you outside of that move. We landed right on top of the daily expected move here. And the new daily expected move, 463.55 to the upside, 451.51 to the downside. We see it. Did it confirm? No. So should I be in this play in any way? No, I should not, because this right here is telling me, hey, this has potential, but right now the MACD is saying what? The MACD is saying, I am turned down in negative territory. There is nothing good about this. Sure, we get some pink bars to make you feel better about it, but if you wanted to, just change those straight to red, because if you are down like this and you have not crossed up, you have no chance. You have almost no chance as of right now for this to head up. You need that to cross up to give you that reason for the trade. We talk about a reason to take the trade in the $100 course. It is currently 90% off. So I would look for that if you're trying to learn how to trade these things and how to manage your risk. Because if I took this early, hey, I'd be paying attention to it, maybe managing that risk if that 15-minute or something like that does roll back down. You'll notice the 15-minute is rolled up. If that would roll back down, hey, I might need to manage that risk because maybe I'm going to go make a small divergence by 451.51 to the downside. Looking at the 2-hour, that thing looked like, hey, it's trying to reject, but this could just cross in the morning and we could head down towards that weekly expected move. As we do get closer to it, we do kind of gravitate towards it. So we'll pay attention to that. See, maybe a 2-hour divergence is what we're really looking for in here. 2-hour divergence with a 30-minute divergence would be nice. But for right now, we have to see more price action on the 30-minute in order to see if this is going to play out to the upside. But this was great. We saw some rigged behavior in the dollar showing insider selling while the stock market was heading higher in this area. We just saw that the dollar was heading higher as well. And that meant to us, hey, there could be a possible rug pull that was coming. And we we notice that and we see that start to turn down. So we saw volatility turn up shortly after the Qs and the SPY turned down, and that headed towards that daily expected move. So hopefully that was helpful. This has not confirmed yet. Keep that in mind, and remember that as of right now, the market and the Qs and the SPY were coming down, but the dollar is coming down as well. So we'll pay attention. We'll see what that looks like in the morning, as a lot of stuff with the dollar happens overnight. As we go over and look at Apple, this is still in the same channel, right? You're still kind of tight in this channel trying to pick a direction, but for the time being, a little bit of an edge to the bulls as this is trying to cross through that center line. So this really here is saying, hey, positivity can be there, but if that wants to roll over right away in the day, as we see the post market coming down a little bit, then that is something to pay attention to, and you really have to trade like water. You got to be willing to flip, because if this loses all the moving averages, well, it's below the 200 and it's below all the moving averages, and if you just start to beat this low, you can see this actually get distributed down because we've built up liquidity here for some time. So I'll be paying close attention to this tomorrow for you guys, seeing if we can get some kind of upward move from these, unless this is going to break down first thing in the morning. We'll pay attention to that. Tesla, and just a quick note, by the way, remember, we get the Fed interest rate decision as well. So the craziness is not over this week. This week is going to be a crazy week, but it's a fun week. I actually really like when markets are moving like this. It's fun to see these big swings. So right now for Tesla, you're seeing right now we're close to that center line, but is there any reason for upside yet? No, we are moving down. You could be flagging out right here. So if this wanted to turn up, yeah, we can head back for that zone, see if we create a divergence outside of our weekly expected move. I think that's the bullish case, is just a 30-minute turning up. The bearish case is the 2-hour has to curl down and make some sort of divergence before we actually get a bigger bounce in the market, and we'll be paying attention to that for you as well. It could get down into our zone down here that we broke through, we gapped out of, and now we can maybe head down toward that zone for a stronger base for Tesla. I would be paying attention to that, but pretty cool that down in this area, we just noticed this. We said, hey, bouncing up to our sell zone, which is right in this little box here, and then we actually do sell off from that area. So if you were paying attention to the signals, this should be pretty good for you. As we look forward, Amazon did have the divergence play that failed, right? Managing the trade is important. That's what we teach on in the courses, is how to manage those trades. And right now you're seeing we're still holding that tapering. We're trying to reject again, but Amazon really dropping off here. So if this 2-hour is curled down in the morning, that means negativity. We can pay attention to earnings for that. We can pay attention to if it's down towards a weekly expected move, but just remember all those rules. Earnings is a 50-50 flip, no matter how the technicals really look. It is a 50-50 flip. As we go into a 30-minute, was this overall confirmed in order to see that upward move? Well, no, it wasn't. We never turned up on this MACD saying, hey, yeah, we have the chance to go higher. Right now, you're just seeing some kind of bounce that could just be flagging in some way in order to make the next drop. Looks like the post market, we're starting to drop down a little bit. So this not confirming should have saved you, and it might even encourage you if you did take a hit with this. I do not like to hear those things. I really, really don't. But I want to encourage you to try to learn from that moment and just say, I'm going to, from now on, especially when volatility is higher, I'm going to wait for those confirmations, because the swing when volatility is higher will be big enough to make a decent amount of money. Amazon never giving you the signal for another move higher, but if it does end up crossing up, a lot can happen before the market opens. If that does cross up, good things can happen. If the 2-hour crosses down, bad things can happen on this MACD, all right? Nvidia, we're looking at this one. This is the one that I actually decided to take. Now, the reasons for taking this one were because it was down by a weekly expected move, and I saw the divergences in the SPY and the Qs at the same time, and also the dollar was dropping while the market was dropping, which told me there was possibly some insider buying. So if they do not want the market to crash down because of Microsoft, maybe they're going to use something like Nvidia to actually head higher, because it holds a lot of weight. So we'll pay attention to that. This has not confirmed yet. I'm managing this trade very, very closely at this moment, but Nvidia going down into my box zone, touching a weekly range. This should convince you, hey, Patreon might be able to help you out. We're giving you monthly ranges on Patreon tomorrow, and this is something to pay attention to, because we can see some kind of reaction from here if this is able to curl up into positive territory. Now we're going to go over to AMD. AMD actually did have a reversal signal, but it has earnings. So immediately I think, okay, this is going to be a 50-50 flip. If I like the technicals so much, which we said during the live video this morning, hey, watch if we turn down, because we could head to the bottom of our zone. We're down at the bottom of the zone. We confirmed the divergences. Notice this difference. We confirmed the divergences. So reason for taking the trade, hey, hands up to you. I get it. If you want to take the trade, it is your money. It is your fingers. You push the buttons. I'm just telling you about momentum. Right now, that divergence is showing up. Triple divergence on the MACD, getting you very close to the center line. This is what you really want to look for in a trade setup. It's kind of unfortunate that earnings is there because I did not take this play because of earnings. I decided not to do it. It seemed like too risky of a trade. Instead, I traded something else. So at this point, we'd say if that is able to go positive, that is a good sign for the stock. Now, we do have weekly ranges and things like that. This could go as high as like 156. It can come test these levels up in here. So I want to pay attention to this right now and just say, if I was taking this play, if I decided to take this play because the confirmation is there, then I would say I'm still not going to risk an amount of money that would overall hurt me. I'm going to take this as, hey, I can take a smaller position. We're going to see maybe a crazy move. The signals look good. If I see that move, I'm going to make plenty of money. That is how I treat earnings. Now, as far as this goes, the 30-minute has curled up. The 2-hour is rejecting the crossing down here. So this is a strong move at this point. We'll see what happens from here and pay attention if there's any structure in here that looks like weakness, as we are still very, very negative on this 2-hour chart. So it's going to take a lot of work for this to go back up and be positive from here, but solid bounce from the divergence down here that actually confirmed, and hopefully someone was able to benefit from it, but you were also treating it very carefully because earnings is a 50-50 flip. Now, as we go down and look at Meta, this has dropped off again, and we'll notice one thing. It has the 2-hour divergence. Was that 2-hour divergence ever able to turn up a daily? No, it was not. So we need to see if this is going to create a stronger base. We talk about that all the time, and people think I'm like just saying it to say it, but you can go make that stronger base. We talked about it coming down like this and then seeing what happens with earnings if we find that triple divergence. Now, earnings, again, 50-50 flip. So if I take anything around earnings, I am going to be downsizing that position. No matter how good the trade setup shows itself, I am going to be downsizing that position. It is something to do and something to train yourself as a diligent trader, especially if you're new. Create those good habits early. This is a good habit to realize earnings is a 50-50 flip. You and no one else except for the insiders probably, and whoever they talk to, know what is happening behind the curtain. So you have to be a little bit more careful and see if this is able to create a good signal for you, and then downsize that position if you absolutely have to take it. Me, myself, I prefer not to take earnings unless I'm just messing around, taking a fun play or something on my fun account. Overall, when I do play earnings, I'm doing it for fun. I'm not treating it like an actual trade, but I will manage it like an actual trade. So at this point, what do we notice from Meta? Well, it did curl down on the hourly, telling you that downside was the most likely option here. So pay attention to that because the signals did tell you that. And if you're going off my strategies, the 30-minute, it did tell you that, and it never curled back up. It never curled back up, confirming another move upward. And so now you really want to pay attention to that 2-hour, and then you have to deal with earnings. So that's a lot to deal with. That's a lot of stress to go through. And I always choose just to go, hey, I'm just not going to do it. But that's the look for Meta at this point. Now, as we look forward, we already kind of touched on Microsoft. Let's just take a peek, see how that's doing. And we'll see. 397. So we're starting to bounce from that weekly expected move in the post market. We'll see how this opens up in the morning, because I highly doubt this wants to close below this channel at this point unless we are going to overall see this actually keep going lower and crash down. But Microsoft is a huge weight in the market, so that would be interesting going forward. We'll pay attention to it. Now, as far as it goes for AMC and GME, AMC showing a reversal signal here, slight divergence, actually pretty good divergence there, just kind of flat on the RSI. So this can turn over to our charts. This means, hey, we are in a 30-minute pullback, if not a 30-minute that can go into a negative trend. So I want to be very cautious with this. I want to see if that's able to base out at any time and curl back up into positive territory. At this moment, 30-minute divergence can turn around 2-hour charts, and look at that 2-hour. It really looks like as it closes below the moving averages, it wants to head down. Now, it has gone positive, so a higher low is possible. But at the same time, this is AMC. This is a meme stock that is actively pushed down by the short sellers, by the market maker. So if they really want to push this down, we can go all the way down to 466. I think we can test these lows down in here. So just be cautious with this. If this 2-hour rolls down in the morning, that would be an overall thing that's saying, hey, negativity is there. As we look at GameStop, we see that negativity there, right? It's been red and it's never really gone back to green in the last few days. So that is something to pay attention to. We can go look at a 30-minute. The divergence that was forming here, it never confirmed, and that is a huge deal. So wait for those confirmations, especially when volatility is high, okay? So at this moment, we see there's no real divergences in this move. There's nothing going on here. It's just going negative, 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 and we'll have to wait until that curls up to really say anything positive about it. That is a bad, bad sign for GameStop. That is a bad sign on the 2-hour for GameStop. We'll see if this can turn around at any point as that is bouncing in the aftermarket, but that's how we have to talk about it today. Sorry to say it. As we look forward, volatility, we were paying attention to the 2-hour crossing up in volatility as another warning of, hey, there is still volatility here. We could see the SPY go lower if that's able to pop up. Maybe we look for a divergence or something like that in this area. That's what we were talking about. For the 30-minute, we wanted to see if this was able to turn back around. What happened? It started to turn back around and then 1683. So 1683 is one of my points that I pay attention to for volatility. It's just a point that I notice we see a lot of reactions or resistance support from, so I want to pay attention to that. That never crossed over, so not only did the SPY not cross up, but volatility did not cross back down, and so there was no signal in here saying volatility was actually going to fully drop off. Now we can pay attention to this going on into the morning, see if that drops off early on in the morning for whatever reaction we are going to get tomorrow, but just note that we do have the Fed interest rate decision. So hopefully this video was really helpful for you guys. That's the overall goal for this video, is just to help you out around earnings, give you a solid guideline and be like, hey, maybe I want to treat it as patience, but if I am going to play something, if I really like the signals, I'm going to maybe downsize my position in case this goes against me, because it truly is a 50-50 flip. So I will see you guys tomorrow live in the morning. Make sure you're subscribed, like the video if you thought that any of this was helpful, but thank you so much for being here, watching to the end of the video. I really do appreciate it, and I wish you nothing but luck for your trades going on into tomorrow, and I'll see you then. All right, peace.